Right. So now I wanted to move on to something called mortgage myth or fact. And I've got a few questions that I wanted to run past sort of all individually, just to kind of get your feelings so that we can quickly just sort of I'll put a few of these to bed. Obviously, we'll still get asked these questions, I'm sure, next week. So we'll start with Gary and we'll sort of work our way around. But you need 20% deposit to get a mortgage.
It's a myth. And to debunk that, I think you could buy something with a 0% deposit, depending on what lender you go to, and whether or not you have the correct income to meet the lender's policy. So you've always got to assume that you need to speak to a broker to make sure that you fit the criteria for it. But ultimately, any deposit that you've got, having a chat with the broker, they can then use that to determine what it is that you can actually buy for.
Perfect. Ed, your credit score is the only thing lenders care about.
Not at all. I mean, naturally it forms... credit score isn't something the lenders will look at per se. Credit profile, credit dynamic is what they look at, but that doesn't form the only thing. So, your applicant profile is something that will come in, hugely come into play. Your income, your deposit, your residency status, all of these elements are ultimately what the lenders look at. So the lenders, yes, they will reference someone's credit profile, and obviously if they've seen impaired credit, if they don't like the performance of someone's handling of borrowing previously, it could well sort of raise its head at that point. Doesn't mean that you're not going to have a lending solution available. However, ultimately it is looking at you overall as to what's going to enhance your prospects of getting a positive outcome. So no, ultimately, no, it's not.
Perfect. Peter, remortgaging is only worth it if interest rates drop.
Myth. Because ultimately, there's going to be a lot of fees involved. There's product fees, there's other costs, and sometimes it might be better to stay with that lender and just do what we call obviously a product transfer, and that might be cheaper depending on your circumstances as well. You might see a 5-year rate, and lenders, well, historically they used to reward you with obviously lower rates the longer you stay with the lender. But at the moment, 5-year money is obviously higher. But it all depends on your circumstances. Just because there's a better rate on a 5-year product, but then you've got a baby on the way and you might need to move in a couple of years and buy a bigger place or whatever. So definitely myth.
Perfect. Gary, once you're approved for a mortgage, you're safe until completion.
Oh, definite myth. Anything can change in your circumstances. So until you actually get an application through and go through to exchange and completion, you're then safe from things, because lenders in their fine print will reserve the right to withdraw the offer if there's a change in the information that you've provided to them, or a change in your credit profile or anything like that. They reserve the right to withdraw the offer. So it's a definite myth.
Okay. Ed, you can't get a mortgage if you're self-employed.
Complete myth. I mean, there's 3 of us around this, so an absolute complete myth. I think it does still sometimes crop up as a question. Clients will have it, I'm self-employed, so I don't know if I can get a mortgage. And I don't know where that perception's come. Maybe it's a historic thing, but no, complete myth, straightforward.
Yeah, fine. Pete, this is quite a loaded one. So it's better to go directly to your bank for a mortgage.
Oh, okay. Definite myth. There's so many reasons as to why that's a myth. No, I think the main one is ultimately, whether it's ourselves as a brokerage or another broker, we've got access to, 80 plus the 100 different lenders available. We all, you're not just going to stick with Admiral for your car insurance just because you've been with them before and just because you bank with them or whatever it may be. You obviously want to speak to a broker to assess the whole market. I think that's obviously the main obviously attraction of going, speaking with a broker to see what's available at the best at the time. But then also, you're dealing with one person directly in that bank. And once that's done, that's great. Okay. But if you've got a few more months until your completion and then mortgage rates come down, they're not going to call you up and go, oh, by the way, we've lowered our rates. We're going to move you on to a lower rate now. That just doesn't happen. No. Whereas obviously as brokers, we're constantly checking these rates. We get notified 24 hours before, at least 24 hours. And we can proactively move with that rate in the best interest for you. So I think that in itself can pay dividends. I think in terms of your long term saving, then going with so definitely myth.
Perfect.
I think I've answered that one.
Probably going for a bit longer.
I can keep going if you want.
Gary, it's you should always choose the lowest interest rate.
I mean, that could be something that you think is true. So I think it's probably a myth, because sometimes the best interest rate might not give you the borrowing that you want. Sometimes the lowest interest rate might not allow you to buy the property that you're after. So I think speaking to a broker helps you dive into the detail a bit, because the headline rate, it might not be applicable for you. So definite myth.
Perfect. Ed, you can't remortgage until your fixed term ends.
Myth. We are very proactive with our existing clients around having that early conversation around a remortgage. In an ideal world, we're touching base with them just ahead of 6 months of a deal expiring, so we can talk about the journey.
Why Why just before the 6 month?
So remortgage offers typically are valid for 6 months. So, if you've got a rate ending in circa 6 months' time, what we can do is talk about the market as of today. We can speculate about the market as of tomorrow and over that coming 6 month period. What we know is what the rates that are applicable and suitable for a client are today. So we can talk to them about taking action to securing one of those rates. Should the rate environment improve through that period, Pete's touched on it, we can assist with lowering that rate with the lender. If a different lender comes into the market and prices at a level that we don't think the lender that we've initially gone for is gonna be able to match or achieve in the time frame that's there, we'll talk about the pros and cons of maybe looking to switch to a different lender. Overlaying with that, we'll always then review what the product transfer options are with the incumbent lender as well, but they don't become available to us until much closer to the
like
current
90 days
rate expiring. So taking early action, you can help the client take comfort in knowing potentially what the maximum rate they're going to be exposed to is, because if rates creep over that 6 month period, they're safe against that. So sort of having that early conversation again, is key. So in answer to the question, it's a myth, but it is a whole different topic around sort of that additional service, going above and beyond and sort of, being proactive as a firm, which is what we are.